My name is Tanya Engels, and I'm an international tax partner with KPMG. So what can we expect from an international tax perspective in Budget 2026? The last few years have been really eventful in the international tax space. We saw base erosion and profit shifting, or the BEPS initiative, and the resultant Pillar 2 rules, which in South Africa has led to the promulgation of the Global Minimum Tax Act. That has been a huge milestone in South African tax legislation. Both taxpayers and SARS are still coming to grips with how to implement and execute this legislation. So outside of this, what else can we expect to see? I always like to say that South Africa has gold-plated first world legislation when it comes to the taxation of controlled foreign companies and interest limitation rules. Nevertheless, even though this legislation, in my view, is a little bit too complex for our economy, every year National Treasury tinkers with the provisions to either iron out complexities or to introduce new complexities. And I would not expect to see anything different in the legislative cycle that will follow the budget speech. From a revenue collection perspective, a seemingly very easy way to increase the tax base for South Africa without burdening existing South African taxpayers would be to impose a higher withholding tax on payments of interest and royalties to non-residents. Currently, our legislation provides for a 15% withholding tax on such payments. But if the recipient of the interest or the royalty is in a country with which South Africa has a double tax agreement, then our right to impose this withholding tax is usually removed completely. Even if we could just have an additional 5% withholding tax, that would create a new source of income which currently does not exist. However, in order to do this, South Africa would have to renegotiate a huge number of tax treaties, which would be time-consuming, resource-intensive, and would likely send the wrong signal about foreign direct investment. I therefore do not foresee this to be on the cards. So in summary, there's not much that Treasury can do in the international tax space, and I would expect the Minister of Finance to say that the focus of SARS should be on compliance with existing legislation rather than introducing new legislation.